Welcome to Midas Letter Live. Today in studio we have a very special guest. I'm with David Kideckel from AltaCorp Capital by ATB Financial. David, welcome to the show.
Thanks for having me, Ben.
Now, getting right into things here, I know you're a research analyst at AltaCorp, and you've managed to raise a $57 million equity raise for Hexo Corp recently, and you also have other significant deals along with that in the cannabis space. Now, are you considered one of the main runners, book runners and co-managers in the space, or?
Sure. So let me start off by just giving a preface. I haven't raised the money. In fact, I'm in research. That would be our banking team that's raised the money. But certainly we were a co-manager with Hexo, involved in a number of other multiple deals very recently, including Cardiol Therapeutics on the TSX, cannabinoid-derived pharmaceutical company, Origin House, Fire and Flower, which is a retail company that will be going public within the next 2 weeks. So we're a very well-diversified, or positioned in a very well-diversified way. On the one hand, from a research standpoint, we cover medical and recreational cannabis, and then on the other side, we also cover cannabinoid-derived pharmaceuticals. Now, at AltaCorp Capital, we're backed by ATB Financial. We're, as I like to say, probably the best, best well-kept secret on Bay Street. ATB Financial, the largest bank in all of Western Canada. So as a corporation, AltaCorp Capital, what we offer on the one hand is the capital markets, that's research, sales and trading, and investment banking. But on the other, we have ATB Financial, which provides corporate financial services, whether that's debt, lending, credit cards, that kind of thing. So really exciting times for us at AltaCorp Capital.
Great. Now, are you beginning to see more interest in the equity research side as some of these junior cannabis names mature into requiring coverage going forward?
Sure. So the way we position ourselves as an entire firm, we differentiate ourselves in the names that we actually want to get involved with. We're looking to be a part of these companies, cannabis, life sciences, or energy, oil and gas, diversified industries. We really want to be a part of the company long term. We're not looking to be making a quick buck and being with these companies for the very short term. So from the equity research standpoint, we have probably the leading franchise on all of Bay Street. In fact, if you compare any North American firm to AltaCorp Capital, we're the only firm to actually have the capacity and capability to cover, on the one hand, again, medical cannabis, recreational cannabis, and then cannabinoid-derived pharmaceuticals. In fact, we're the only firm in Canada to maintain coverage of the world leader in cannabinoid-derived pharmaceuticals, GW Pharmaceuticals. And their lead product, Epidiolex, of course, was approved by the US FDA back in June, and the US DEA subsequently rescheduled that from a Schedule 1 illegal substance to a Schedule 5 substance. So it's now available for sale in the United States, and we believe Epidiolex will be a blockbuster product, generating sales in over $1 billion.
Great. That seems like a huge differentiator going forward, especially with a lot of investors expecting that the ancillary end of the cannabinoid market, and the profits eventually will lie in the research division, biotech, the substances that derive out of cannabinoids, flower.
And maybe I can just add one thing to that. So we've seen it's been a big area, to your point, Ben, with big alcohol, big tobacco. You see Constellation in with Canopy, with Hexo. You see their industry-leading partnership with Molson Coors on the beverage side, and then tobacco with Altria coming in to Cronos. What we really feel is the missing link here in the entire sector is where big pharma comes in.
Yep.
And until we get I think the community as a whole gets more clarity from the U.S. government where they're going to take cannabis at a federal level, you might see some of the players come in. We've already seen, CanTrust working out some R&D and distribution agreements with Apotex. Tilray is an example with Novartis. But as far as big equity deals, the type of the Constellation type magnitude, we feel that this is really the missing link in the entire sector, and we're just in such a great position to be able to have an opinion on this, given that for myself, I spent over 10 years in industry working for Fortune 500 companies in both biotechnology and big pharma.
Absolutely. Now, sticking with the research side, Does AltaCorp have the proper checks and balances to make sure your research isn't excessively compromised on the buy side, or how do you structure that so you don't have excessive optimism?
Sure. So actually, I would even argue that a lot of the optimism is coming from the sell side, not necessarily the buy side. The reason being, you see a lot of analysts putting out research out there and slapping very high multiples on a number of these cannabis companies. So what we take very much a lot of pride in doing at AltaCorp in research is being extremely conservative in our approach to any company we take on. Like I said, we're selective and differentiate ourselves in the names we choose to get behind. We just recently led a deal as a sole book runner for Valens, Growworks, who we also cover. We view them as one of the premier businesses in the entire sector. They have industry-leading partnerships with Thermo Fisher Scientific, as well as the exclusive Canadian rights to a beverage technology by a US-based company called Terrakino. So from a research side, we do feel that one of the key differentiators we bring to the table is a very balanced approach, where our both corporates and buy-side accounts look to AltaCorp Research as a trusted contributor to the overall business.
Fantastic. Now, outside of cannabis, which you're conducting a lot of deals and co-managing, book running a lot of deals, which other sector are you starting to see the most deal flow? Right.
So I think a lot of attention now is being shifted to what's called the synthetically derived cannabinoid space. Most of these companies are private right now, so a lot of folks don't even hear about them. The main difference of synthetically derived, let me backtrack a second, there are about over 100 different cannabinoids in the cannabis plant. Synthetically derived cannabinoids, whether that's chemically derived or biosynthetically derived, you're essentially producing these, whether they're from a genetic level, from the biological perspective, or at the chemical level, creating new molecules through organic chemistry, versus plant-derived, where you're taking cannabinoids from the plant. So a lot of the deal flow we're seeing, and we're involved with a number of the private companies, is from the synthetically derived cannabinoid space. One of them in particular, called Willow Biosciences, very impressive, this company. They're in the business of biosynthetic cannabinoids. They actually have a history. The management, another key part to any company we're going to look at and get involved with is, can the management team actually execute? So we see management from Willow Biosciences, they already have a previous track record in synthetically deriving thebaine in the opioid side. So to close the loop on that as well, just got back this week from the US, where I was doing a site visit with one of the world leaders in controlled substances, and these are all chemically derived. This company called Noramco, it's a private company. Historically, a big part of their business has been in the derivation of opioids. That's still continuing. However, they're seeing now a big shift to cannabinoids. And in fact, they have a partnership with Cardiol Therapeutics. As a firm, we just were the sole book runner taking Cardiol Therapeutics public on the TSX. And just to say, too, of all the cannabis names that did an IPO on the TSX, AltaCorp Capital, we actually were involved with, in fact, we led two of them, Cardiol Therapeutics, and this is 2 out of 4. The other one was CanniMed, which was, of course, was taken out by Aurora. So when people look to AltaCorp, I think the main message that folks should know is really it's not just our solid team, whether it's sales and trading, banking, research, or on the ATB financial side. It's also the intellectual capital that we bring, just having been in the space from day one.
So I take it you're genuinely interested and you're genuinely believe that the synthetic cannabinoid space is going to grow. It's not going to end up, say, like the synthetic meat industry, where you can grow it in a lab, but consumers don't really want it. You would say that this is a lot different than that.
I would. In fact, we're hedging our bets on it, so to speak. This is a major direction I'm taking our franchise into. And you look at companies like a Kronos that has a deal with Ginkgo Bioworks. They're also in the biosynthetically derived cannabinoid space, as well as Organigram, who has a partnership with Montreal-based Hyasynth Biological. So we don't think this space is going anywhere. It's only going to get bigger. Now, I do just want to point out that I don't think it's plant-derived versus the synthetically derived space. I think it's a combination of both. And the reason being, the purity levels that you can obtain with the synthetically derived cannabinoids, they're much higher, the yields are much higher, and costs can actually be a lot lower. And when you're looking at very rare cannabinoids, to extract these from plants, the cost is so high and the yields are so low. And this is where the synthetically derived cannabinoid space really is going to come into play.
Absolutely. Well, great update, David. Thank you for stopping by the studio. Hope to have you back again.
Yeah, thanks, Ben.